Welcome to the Everything Financial Radio Show here on the Legacy Radio Network. I'm glad you're with me today. I'm your host, Dennis Tubbergen. Hope you're having a great week. We have a lot to talk about on today's show. I'll be joined shortly by Mr. Ian Gordon. Ian is with the Long Wave Group, and Ian is an expert in economic cycles, and we'll be talking to him about whether or not our current economic climate was predictable and where he thinks we might go from here. Also, this past week, a news story that talked about how Brazil and China have now set up a preliminary deal to trade in their own currencies, avoiding the U.S. dollar, a troubling trend. Are the U.S. dollar's days as a world reserve currency, as the king, numbered? Also, Nouriel Roubini, Paul Krugman, saying this past week that there are some dangerous parallels to the 1930s. We have been talking about the economic season in which we find ourselves for the last year. Here's a couple of prominent economists that are now maybe agreeing. We'll talk about that and give you a bit from the article. Also on today's show, Peter Schiff, who was a guest just a few weeks ago, was quoted this past week in Money News, talking and making a prediction that you'll want to stay tuned to hear about. And then finally, it's only appropriate because the 4th of July is this week that we have some advice from one of our founding fathers. I'm going to share with you some wise words from a wise man, Mr. Thomas Jefferson. And in keeping with our theme here on the Everything Financial Radio Show, I will share with you what Mr. Jefferson had to say about fiscal policy and banking and inflation and deflation. And yes, all this stuff was a concern over 200 years ago as well. Couple of free offers for you. First of all, if you'd like to get a copy of our book, The Little Book on Investing in Today's Economy, you'll get the book and the CD. You just simply go to investingapproach.com, investingapproach.com, and request your free book. Also, if you've not attended a discovery group recently, feel free to go to personallegacyseminars.com. That's personallegacyseminars.com, and register for any one of them. We'll be out in Granville on Tuesday, July the 10th at Sunnybrook Country Club. We'll be at Boulder Creek Golf Club in Belmont on Thursday, July the 12th, and we'll be at the Highlands Golf Club on Tuesday, July the 17th. The website, again, is Personal Legacy Seminars to register or to get more information. I have the distinct pleasure of having back with me today on the Everything Financial Radio Show our friend Mr. Ian Gordon of the Long Wave Group. Ian has, as I'll have him explain in a minute, really expanded on the work of Mr. Nikolai Kondratiev, a Russian economist that concluded that capitalist economies move in boom and bust cycles. And Ian's work can be found at the website, thelongwavegroup.com, and I would encourage everybody to go check it out. Ian, thank you for joining us again today on the show.
It's a pleasure.
Ian, I have been reading your newsletter dated June 15 of 2012, and in it you draw a comparison. I believe that the term you used were spooky parallels between the Great Depression and the Euro crisis. Could you give the listeners some perspective?
Well, I think to start off with, we should understand that according to the my cycle work, we are repeating the depression of the 30s right now, and that the beginnings of that repeat occurred with the stock market peak in 2000, and we call that the winter season of the cycle. It's the deflationary depression stage of the cycle, and the whole purpose of winter is to cleanse the economy of the debt that's been built throughout the three previous seasons of the cycle, but principally has been built into the autumn of the cycle. And autumn in our present cycle was from 1982 to 2000. So massive amounts of debt have been built into the cycle, into the economies worldwide, and that process of debt unwinding is now beginning, but is being fought by governments. The governments just don't want the debt bubble to collapse because they know that the ramifications of such a collapse are an economic depression akin to the depression of the 30s. And the parallels that we see between what's going on now and what happened in the 1930s are, we think, very acute, because there was a massive monetary crisis that ended ultimately in the 1930s in the complete collapse of the world monetary system. And that collapse was initiated by a banking failure in Austria in about May 1931, when the Credit-Anstalt Bank, the largest Austrian bank, failed because of a lot of bad loans that it had on its book. And at that time, the Austrian government and the Federal Reserve and even J.P. Morgan and the Bank of England were all trying to bail out the bank, because they knew that once it went, it would be the first domino, and eventually the whole system would be taken down with that collapse. And unfortunately, they couldn't save it, so that it actually bankrupted Austria in its efforts to save it, and Austria was forced off the gold exchange standard system, and Austria was quickly followed by Germany. So the whole system then started to unravel, because at that time we were on a gold exchange standard system, as I said, and so people started to say, well, who's next, and which country is going to fail next? And they picked on the United Kingdom because Britain had returned to the gold standard system at the pound was set at the same rate as the pound had been prior to the First World War against gold, and they knew that set had been too high, so they started to attack the pound by exchanging their pounds for British gold, and ultimately forced Britain off the gold exchange standard system. And of course, with that, the British Commonwealth or British Empire was also sort of came off the system as well. So, and then eventually the speculators turned their attention on the United States. Now, the United States at that time was singularly the world's greatest creditor nation by a long shot, and also was a huge economic colossus. And but nevertheless, they decided that the United States, the dollar, would not be able to stay on the gold standard system, so they took a run at U.S. gold, exchanged their dollars for U.S. gold, and American citizens were also exchanging their paper dollars for gold, which they could do at $20.67 an ounce. And America was forced out of the system in March 1933, when Roosevelt became the president. So what we're seeing here is the same kind of parallels. The beginnings of the collapse of the monetary system are again starting in Europe, and with Greece hanging by its fingernails to stay in the euro, and Spain not that far behind, and then Italy, and then France, and the whole thing is going to collapse. But the politicians are trying to keep it afloat by printing huge amounts of paper money. So the system is actually, the only difference between then and now, the 1930s and the present, is that then we were on a gold standard system, and countries were quite happy to move off that system and just go to a paper money system so that they could print paper money in order to fight the Depression. Now they're reluctant to get off a paper money system because they can print as much of it as they want, but eventually we're going to see that there's a total lack of confidence in paper money, and we think the collapse is beginning now, as it did in 1931 in Europe.
Ian, we've got maybe 2 minutes left in this segment. When we see the first European country fail, how quickly will the rest follow suit?
Well, I think then it's going to be, it's going to be very rapid. I think the question really is it going to be the failure of southern European country opting out of the euro or being forced out of the euro, or is Germany going to make the choice to move out of the euro simply because Germany is being throwing bad money at very bad money, because all paper money is bad money, but Germany's very, I think, reluctant to continue to sort of print all this money to try and save the system. So it could be Germany that opts out of the euro initially, and thereby bringing the whole thing down in a complete sort of collapse.
Well, certainly the German electorate seems to be signaling that they feel that way. You are listening to the Everything Financial Radio Show on the Legacy Radio Network. We are chatting with Mr. Ian Gordon, and we will continue our conversation with him after these words. Stay with us.